But back to the point at hand with Israel anyway. A country cannot indefinitely fund occupation abroad and consumption at home when both depend on imported capital and materials. What is now visible is not collapse but repricing. The market adjusting to risk created by political arrogance. The rating outlooks, the bankruptcies, the deficit numbers, the insurance premiums for Red Sea routes, they are all instruments of the same correction. The world's beginning to charge Israel the interest it's managed to avoid for decades. The line of accountability, perhaps it's not an obvious one here, but it does nevertheless add up when you think about it. No formal sanctions regime exists here. Yet Israel firms are losing access to partners, their investors are adjusting to exposure, and logistical costs have just gone up and up and up. Markets are not moral actors at all, they're anything but. But as a rule, they react to instability. And when instability is tied to a state's own aggression, its financial discipline starts to resemble justice anyway. S&P and Moody's adjustments are technical events, but their effect is political. They make continued war more expensive. Insurance underwriters now price shipments to Israeli ports higher because of Red Sea risk. Not that they choose to go through it as a rule anyway, but it's a heck of a longer distance to go around Africa. Pensions funds face public campaigns against holding Israeli bonds. Universities and charities and consumers are shifting procurement, especially as more people rally against them and demand change from them. These changes are incremental, but they all add up at the end of the day too. The cost of impunity is entering ordinary accounting now more and more. And the same logic applies domestically too. The port of Eilat is no longer a functioning trade gateway at all. It's gone bust. The startup nation narrative that once insulated the government from criticism now rings rather hollow. Startups depend on foreign capital and open markets, yet both are sensitive to perception. Investors read the same news as everyone else does, don't they? A government that faces genocide allegations at the ICJ cannot also sell itself as a safe innovation hub without paying some sort of penalty. And that discount is now visible in capital flight and postponed projects and a flattening growth curve. And what is especially notable here is that history teaches us that an economic reckoning often precedes political change. The numbers strip away rhetoric. They show that sovereignty maintained through coercion creates dependence elsewhere, on loans and on imported labour and on external tolerance. Israel's power abroad is being met by counterpower in the language it cannot ignore. Price. The state still has buffers, of course, though. The US aid continues, it may even increase. Western banks maintain lines of credit, some regional partners stay quiet. None of this alters the trajectory, though. Every layer of support now carries increasing reputational cost for those who provide it. Governments that shield Israel diplomatically are underwriting an economy whose fundamentals are weakening under their own eyes and whose own citizens resent paying for that.